Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So, it pays to come to the coaching sessions. You want to know why? Because we are 5 for 5 with the stocks that we've highlighted during the coaching sessions. Etsy, JD, Stitch Fix, FedEx, and now Constellation, STZ makes it 5. So this was one of the names I had circled coming into the week. I thought it was one of the most interesting setups of this week. In particular, there's a lot going on this week with J.P. Morgan and now upcoming retail sales. But in terms of like the names actually scheduled to report earnings, STZ to me was one of the most interesting. And I want to stress this more than anything else is that one of the major benefits about options, right, is that you don't necessarily have to look at these trades as black or white, right? So it doesn't have to be, am I bullish and I want to buy calls for the to go up, or am I bearish and I want to buy puts for it to go down, right? Really, what I try to do, maybe more than anything, when it comes to these earnings catalyst trades, right? I'll definitely have bets that are strictly directional, right? Sometimes I'll just have calls. Sometimes it'll be call spreads, it'll be call flies, or on the opposite, put spreads or put flies. But what I like to do a lot, maybe even the majority of the time, is look for kind of inefficiencies, let's say, in the option pricing, right? And it's basically just looking at the trade not really from whether it's going to beat and go up or miss or go down perspective, but whether the options seem to be underpriced compared to what the potential move could be, right? And FedEx, right? That was one that coming into the week, I was saying that their STZ had a lot of similarities to FedEx. I wasn't saying necessarily that it was going to get smashed because I didn't really have a strong opinion on which way it was going to go. But what I wanted to say was that FedEx had a similarly strong move down into its report, right? FedEx. So this is Constellation. Let's go back to FedEx just to kind of talk through it. So FedEx had a really strong move down right into its report, right? It broke a multi-year uptrend, right? So it broke a multi-year uptrend going into its earnings, cleared all significant areas of support for the year, right? Just kind of hanging out in no man's land. To find any area of resistance or support, I mean, you'd have to go back a couple of years. So this is what I drew up at the time. I was saying, so it's basically hovering right at a support level from the beginning of 2017. Had a ton of room higher. Underneath that, had a ton of room lower. The options were, at the time on FedEx, were only pricing in about, on average, what it had done over the last 2 to 3 quarters. So a stock which broke a multi-year uptrend, right, should have volatility expanding. The intraday trading ranges were increasing, so you're starting to see larger moves, right, on a daily basis. It was well below any significant resistance, right? So there was just air pockets above. There was a huge air pocket below. And then when I look at the options, I'm like, okay, the options are probably going to be expensive because, all of these things combined, I mean, it should be indicating a higher premium because there's the higher potential for volatility. But in this case, the options were basically just in line with what had moved on average the last 2 to 3 quarters. So that's why I thought, strangle in that case was the play or the strategy to go with. And now flipping to STZ, I mean, there were just so many similarities. It was kind of uncanny. Yes, it had bounced over the last couple of days, but look at the chart going in, right? Thing had gotten absolutely destroyed. The average trading ranges had on a daily basis it opened up, right? It was moving about 5 to 7 points on a given day, way underneath any sort of resistance, air pockets above. And if you go back, right, it had basically nothing underneath. Right, it was hanging out right here. What was underneath? Nothing, right? Nothing until 150 to the 140. So it It was well above support, way underneath any sort of major resistance, and it broke. Look at the trend. I mean, it broke into a multi-year uptrend, right? Look at this. Broke a multi-year uptrend. So you would assume the volatility would be expanding, the options would be expensive, right? Yet going into STZ, the options were only priced in about 10.5 to 11. That wasn't even on average would have moved the last 2 quarters. The last 2 quarters it averaged about a 14 to 15 point move. The last 2 quarters it was priced in 10.5 to 11. So not only were there multiple indicators saying that volatility should be higher, but the options were actually priced in less than what it had averaged just on the last 2 quarters. Right, so that's why I thought in this case, just like FedEx, like I didn't have a bias. I wasn't saying I think it's going to go up, I think it's going to go down. I just was saying that I think the options are mispriced, and I think that there could be a bigger move than what the options are indicating. Right, so that's why again, same type of strategy, strangle, and what happened this morning? Constellation gap down 20 points, so almost twice what it was pricing in. So it's just. It's another example of really what I like to do a lot and what I screen for a lot for these earnings catalysts. It's not like the up or down, black or white. It's more like the gray area, like looking at it from a different perspective, right? And that's really like the beauty of options. It's like you could play it both ways. I mean, you can't if you were just equity only, you can't buy and short STZ at the same time. It's not allowed, right? But as an options, I mean, you can bet on both ways at the same time. I mean, I could buy options. I could buy a call and a put. I could buy a straddle. I could buy a strangle. Right? You could bet on both ways at the same time as long as it has a big enough move, to compensate for that. Then you could potentially make money. So just try to expand the playbook. Like look at things from a different perspective. Like think outside the box a little bit. There's a ton of names that are flying around. And it's not always about picking the direction. It's about like screening, finding the areas where there's indicators that are saying that this should be set up for a bigger move, right? And then it's targeting the contracts that could really give you like the best risk reward. All right, so I'm all fired up about it, but what I will say is that definitely try to stop in on those coaching sessions, our next coaching session, so we can keep this streak going. I was worried that I was going to mush it, but when we were talking about it on Monday, I was saying that the streak was going, and then STZ's not made it 5. So let's see if we can make that 6 after our next coaching session. So still lots going on. Retail sales should start tonight, so keep an eye out for those. And then before you know it, earnings season's gonna be here, so lots to look forward to. If you guys have any questions or comments, pass them along. Whether in the comment section of the video or if you want to reach out to me personally, I'd love to hear from you. Hope you guys have a great night, and I'll talk to you in the morning.